So welcome everybody to the first episode of the Gretchen Casey Show, where I talk to real people in the field of real estate and investing who are not only experts, but they are generous and willing to share their knowledge with us today and share their wisdom. The goal of the show is for you to gain some information and tips and to help you reach your goals in owning real estate and to take some of the guesswork out of what to do or who to call when you need help. And today I have Guy Liu talking to us. Guy is the president of Homeowner Soon, which is also known as HOS Financial. And since 2005, he's provided custom rent-to-own programs across Canada. I first met Guy at a conference a number of years ago, so we've known each other quite a long time. And I'm going to turn it over to Guy, and he's going to introduce himself and give us a little background about who he is and what he does.
Thank you so much, Gretchen. It's been my honor to be invited on this to share some of our, our programs. I want to start you off saying, I am the president of Homeowner Soon. I've been working with HOS since 2005. We probably executed close to over 1,000 properties right now. The beauty of the rent-to-own, basically, for anybody who doesn't know what rent-to-own is, it's a program that's available for anybody that's been turned down by traditional financing. So for instance, if you have great income, but because of some credit issues, and that's going to pretty well block you from getting approval from CMHC, Genworth, or Canada Guarantee. This is where we actually step in. In our program, we actually purchase out the house with a minimum of 5% down. As long as your income is qualified, we always try to keep the income to house guidelines within the TDS rules for mortgage qualification. You're pretty well approved. Credit issues, it's not a problem. We've had a lot of clients that's got bruised credit, no credit, previous bankruptcies, consumer proposals. These are things that we could fix over time. So we do have a credit remedial program that we suggest to a lot of our clients that come in, and they'll build the credit within the period of 3 to 5 years. Now, the beauty of that is when they do exit from our program, they get to qualify with one of the major banks or with a mortgage agent, and they become homeowners where in the past they've been blocked. So instead of renting, it's a good time to get into the market, especially with now, with COVID-19 that's happening right now. A lot of the house prices have dropped. But as you know, when the market picks up, everything rebounds. Like I used to remember, even in the GTA, things were moving up at a rate of 8–10% a year. So it kind of makes it hard for a lot of consumers to enter into the market. So the good part about the rent-to-own model is, we kind of build your down payment up. So even though you come in with a small down payment of 5%, usually about 20% or more what you pay per month will be added back to the original down payment. So you'll accrue a down payment of anywhere from 10 up to even 20%. So this way, when you do exit out, it's a lot easier to qualify for a mortgage. What do you think, Gretchen?
I think it's great, and I would say that a lot of people have a lot of questions about it, and I guess a few questions I get. So one would be why do rent to own? Why not just wait 3 years and see what happens, and hopefully I can clean up my situation, and why use your program, and what's the benefits of your program versus either doing nothing or something else?
It's funny you asked that. I have an example. I had a client that called in for another mortgage agent. So they sent in the file. They were looking at purchasing a property out in Kitchener-Waterloo area. He was working in manufacturing, so he was on the assembly line. He was making around $75,000 a year. Good income. Credit was a little bruised. He was in the 500s. And he was basically looking at the rent-to-own scenario. So I quoted the client, and the client says, the payment's too high, because of course they're always comparing themselves to, the lowest bank rate, even though he doesn't really qualify. So he turned it down. A year later, he reapplies again. And now the house prices went up from mid to high 200s into the 300s. So I quoted the client again. And the client said, oh, the payment's too high. I don't want it. A year after that, he reapplies again. Now the house is in the 450 range, and it says, I'm sorry, your income doesn't really match anymore. You can't qualify. So, he lost out that opportunity, because most people think that, okay, so I have Bruised credit, I'll wait a year. It's not always a year, especially if you've got some collections. It stays on your credit bureau for a period of 6 years. So a lot of people think that, even though I pay off my collections, I'm good the following year. It's not the same. It's not the same case. A lot of times the lenders are looking at previous credit histories. If you have Bruised credit, late payments, vehicle repossessions, or sometimes even a foreclosure in the past, that is going to block you from basically getting it approved in the future. So the beauty of the rent to own is allows you to get into the market now at the current pricing, because once the market starts moving, we can't predict how fast or how high the market goes. Even now, especially even COVID-19, we always hear that, property prices are dropping. I'm still getting multiple offers in the Hamilton to Niagara region, where they're trying to buy entry-level property in the 300s, and they're getting 6 different competing offers. During a COVID-19 environment, I'm still seeing a lot of competition, especially in the lower end. If you're buying a $2 million house, absolutely, you're going to get some great deals out there. People are slashing prices 10, 15, 20, even up to 25% just to sell the house. But for entry level, absolutely not. That market is strictly high demand, and it's going to continue that way from now to who knows.
Yeah.
So, yeah.
Okay.
And also another reason to rent to own. We have actually 3 different programs. One is a purchase program. Okay, that's with 5% down. Our secondary program is also on the refinance. We're finding that a lot of people now are, okay, for instance, let's say you have a mortgage with TD Bank or BMO. You have a private second, and you're currently up to 80% last year, 80% loan to value. What happens this year when your mortgage expires? That second mortgage you thought was at 80%, guess what? The appraisal came down maybe $10,000, $15,000. You're sitting now at 83% loan to value, and you can't find a lender. I've got 2 case studies right now where we actually quoted out this week where the client's second mortgage expired, and they can't find another lender for it. And we're seeing, if you don't mind,
just explain what loan to value is.
Okay, so loan to value is basically how much you owe versus what the value is. So a lot of the lenders are basically, they're putting a glass ceiling. So they really don't want to lend beyond a certain level because, again, there's less equity and the risk factor goes high. Because of the COVID-19, so a lot of lenders are now being a little more conservative. And a lot of times they're stopping at 75% of the value of the house. That's as much as they're going to lend on. Some are going up to 80%, and those are rare cases, and the rates are high and the fees are high. So we're going to see a massive uptick, especially in the refinance side. And especially now, I'm finding that a lot of clients are, because of the COVID-19, they're missing a mortgage payment. So once you miss a mortgage payment, a lot of times lenders, they kind of frown upon it. Of course, they can't evict you at this point at current time because the courts are not open yet. But what happens when the courts open in July or August? We're seeing a massive uptick in lawyers' letters being sent to clients saying that you're currently, you missed your mortgage payments. We're now adding fees. So therefore, we're recalling the loan. You have to pay up. If not, we're going to start the power of sale proceedings once the court opens. So we have a lot of consumers are scared, not knowing what to do. So this is where we actually step in with the 3 different programs. We kind of help out the people that can't buy a house, or people that's currently in a house, and people that's currently losing a house. So we kind of touch on all 3 points there.
Yeah.
Any questions at that point, Gretchen?
No, I think that's very important to know, because then I guess the idea in those other 2 scenarios is they can stay in their current house, not have to move, not have to rent somewhere else, and then fix problems so then they at then later date take back possession, I guess, right? Is that how it
Oh,
works?
absolutely, absolutely. Our rent to own on the purchase program, we have probably over a 95% success rate. And the reason why is people that actually come in to purchase a house, I mean, they are actually giving 5% of their savings. That's basically all the money they have in their entire life. They are vetted out to make sure that the income to house ratio works, so the affordability is there. So they have no problems keeping the payment up. And our investors who actually become the actual title holders, they feel good because we always say they're social responsible investors. Our investors are there to help people, especially people in needs, because our investors, they have great credit, great income. But at the same time, instead of investing into a stock market or investing into mutual funds, they feel good about investing into fellow Canadians and helping other people. And that really helps them out in terms of investing, which is great. It's almost like ethical investing.
Yeah.
Now,
And 95% success rate says a lot because rent to own, as many know, does have kind of a bad rap. That there have been some companies who are not ethical or are not helping that person through the process so that at the end they do qualify to own the home. Which a quick question about that. So what do you do differently maybe than some others to make sure that they do own the home and that they aren't later just left losing money and not owning the home?
Oh, they always seem to make it through because, when we calculate the payments and everything else, it has to be affordable. And because we also have a credit mentoring program with it too, we kind of help the client make sure, last thing you want to do is get into a rent to own and next minute you're leasing, 2 Mercedes-Benz and you're getting over your head. So we try to keep it very conservative. We teach people how to budget and how to control the costs. And they're very thankful about that. Now, a lot of people say, rent to own is very expensive. We always hear that. So think about it. In our program, it's almost like a layaway program for a home. So generally 20% of what you pay per month will be added back to your original down payment to accrue a larger down payment into the future. So even though your payment is high, but your effective cost really is not that high because 20% of that is really your savings. So you're kind of banking. So instead of like saying, I'm going to rent, I'm going to start saving money per month. Emergency comes up, I need to repair a car, the kids got to go to university, they're going on vacation. So a lot of times they're spending their savings. So they're really not saving up enough to get a down payment for a house. Here, it forces you to. So by coming into the program, having that down payment, you're going to build up a higher down payment. And for sure, you're going to have a much higher success in getting approved in a mortgage in the future.
Okay, that makes a lot of sense.
Yeah.
So, third, did you want to add to that?
Yeah, so let's tap on to the negative news. It's funny, I've got a good tale. Because originally when I came to Homeowner Soon, I was approached by a couple of colleagues, and they were asking me, would you be interested in being a credit manager for Homeowner Soon? And I say, what is this about? They actually took me to Picker Barrel over at Yorkdale, and they kind of sat me down, explained the program, and I'm going, huh? Is this legal? I've never heard of this before. So that kind of prompted me into investigating because I am a licensed mortgage agent, so I do understand financing, and I'm always looking for the best interest of my client, so that's extremely important for me. So when I started looking into the program, they actually brought that program in from the US. So they actually modeled with some of the programs they learned. So, as a mortgage agent, the first thing I want to do is, start to inject some of the Canadian guidelines into a rental program. And that kind of made Homeowner Soon highly successful because most of our competition that started at the same time as we are, they didn't last for more than 3 years. Because a lot of times, most rent-to-own players, they're not finance people. They're a couple of investors who took a real estate investment course from maybe like Robert Allen or from Rich Dad, Poor Dad, and they say they're rent-to-own experts, and they put things like crazy appreciation rates, or they don't underwrite the file properly. The affordability is not calculated in there, and they fall apart. I mean, I've had people put people into a 2-year program. I have one person who had a $400,000 house in Hamilton, and they put a waitress in there that's only making around $25,000. So right off the bat, I mean, she defaulted in 2 months. So these are the horror stories you see on, you know, if you want to Google rent to own, you see these horror stories because a lot of times they do fall apart. Another thing too is the contracts. A lot of rent to own companies, they don't understand what the compliance rules are for the insurers. Like CMHC, Genworth, they always have a certain guidelines that you have to. The contract has to be compliant with the rules. So we make sure our contract's been evolving over the last 15 years. So far, we've been approved by all the major insurers. We've been exiting our clients out to the major banks like BMO, TD, CIBC, RBC, and they've been funding these deals. And that's the reason why we say our success rates are extremely high, because we've done our homework. We tried our model, we tested it, and so far it's going strong. And because of that, you know, we have so much support from the mortgage industry, realtors, bankruptcy trustees, accountants. So, yeah, we're doing extremely well.
That's excellent.
Yes.
So what would one last piece of advice be for Canadians right now?
Well, in terms of purchasing or in terms of refinance or in general?
Whatever you'd like to.
Well, if you look back 6 months ago, before September, most Canadians seen what happened, okay? A lot of people were discouraged about going into the real estate because they're saying, oh, I'm getting so discouraged. I'm trying to buy a house in Oshawa. We went on a realtor. The realtor's telling me that you better come in firm. Don't put any conditions. There are like multiple offers. And it's very, I guess it's very tough. I mean, mentally, because you're trying to get a house and you can't buy. But right now, this is a great opportunity because market is soft. People are, you know, they're not putting multiple offers in. So it's a great time to come into the market now when the market's a little bit on the low side. And that's going to help you become a homeowner in the future. And you're not going to regret it because let's say you wait another 6 months from now and the market's on fire. And guess what? You're back to the multiple offer game again. You're going to be paying house, you know, bidding 5%, 6% above asking. Meanwhile, now you could be bidding 5-6% below asking. So this is a great opportunity to buy. Doesn't matter your credit's great. If your credit is great, go right into financing right away. But if your credit's not great, guess what? You got the down payment. You've got the income. Come into the rent-to-own program. Exit out in 3 years, and then you become the owner again. So it's a great opportunity to buy at this point in time.
I think that's very helpful advice, and I agree with you totally. It's definitely a good time to do something and act while the fires are hot, I guess they would say. Yes. So thank you so much, Guy. If people want to reach out to you, what is the best way for them to find you?
Okay, so if you want to reach out to me, you can send me an email at guy, which is GUY, at hosfinancial.com, or call me. My phone number is 647-933-0178.
Okay, excellent. So I'm going to share that information as well in the comments section after. And thank you so much.
Well, actually, a better suggestion would call Gretchen. She will process the application, and Gretchen will send me the application, and then we can process that way.
Oh, I appreciate that. I'd be happy to do that. That would be great.
All right, awesome. Thank you.
All right, thanks so much.
All right, have a great day. Take care.
Bye-bye.
Bye-bye.